basically, if you own a small business, you can deduct pretty much, well, I'm sure there's a ratio of travel expenses,
Right.
entertainment expenses. Is that pretty much it? And what about health care?
Healthcare, the IRS is working harder to get the small business owner on a level playing field with the bigger companies of the world. If, depending on your type of entity, you can take your self-employed health insurance deductions on page 1 of your individual tax return.
Is that right?
But again, that is limited. In your example, well, if I don't take a salary, I don't have to pay any payroll taxes. Well, the IRS comes back and says, well, if you don't take a salary, we're not letting you take your health insurance deduction on page 1. You would then put it on your itemized deduction schedule on Schedule A.
That's why we need CPAs.
Yes, and they came out with new regulations this past December for small business owners in the S corporation arena that as a 2% shareholder or more in an S corporation, you are not allowed to deduct your health insurance.
Is that right?
Unless it is titled properly and paid by the... So that they've made it more complicated than it's ever been.
So you mean you have to pay tax on the health insurance premium?
You will take it into income, and then in your W-2, you'll pay payroll taxes on it, and then they'll let you deduct it on page 1 of your individual tax return.
Okay, we are going to take a small break, and then we're going to be right back and speak to Scott and Steve. We are back with Steve and Scott. We're going to continue our discussion on starting a new business. Steve, what's involved in filing these various entities as far as the cost? Is a corporation more involved, or more expensive to file than a sole proprietorship?
Sole proprietorship and the single member LLC, which is a one-member LLC, both file a very simple form. Is basically just a profit and loss statement called your Schedule C for self-employed individuals on your individual return. The S corporation, a multiple partner LLC, and partnerships, they get pretty in-depth in terms of interpreting law, filing balance sheets, and it's a whole separate tax return that needs to be completed, along with the accounting background and the records to produce that.
Well, we have a subchapter, on a sub S, I think they call it. You don't have that income, since it's a pass-through. There's no tax on that income. Is that correct?
There is a small franchise tax in North Carolina that is a 3-factor tax based on the value of your retained earnings, the value of your assets, that your furniture and fixtures and equipment that you own, and that the other one is the appraised value by the county. Just usually the amounts aren't very large depending on the size of the company, but it is the only tax that you'll pay at the S corp level.
I have to say, you're making me pretty mad now.
I'm sorry. I'm sorry.
What about home office deductions? That seems to be like a red flag. That's always
that is the huge red flag that I always try to talk clients out of doing. The problem is that the IRS does not believe in its heart of hearts that you will designate an area of your house solely for the purpose of business. Meaning you don't let your kids walk in there while you're doing business. There's no TV, there's no futon for visitors in the corner, or toys for the kids to store in that room. And the other side of it is that once you start renting or depreciating your house as an office in the home, that part of your house now becomes a taxable event when you sell it down the road.
Oh,
it becomes
really?
Business property.
Oh, so that section of the house now becomes an investment.
Yes. And when you sell it, you are supposed to recognize taxable income related to the portion of that house.
So it's really more trouble than it's worth.
That is my general feeling and what I consult with my clients. Not only the red flag, but changing the status to a taxable event on your house, which, as we know right now, unless you have huge gains, you don't have to pay taxes on it.
Right. I think I know the answer to this question, but I'll ask it anyway. Bookkeeping, is it really necessary to keep accurate bookkeeping for an accountant to do his job properly, or can we just...
Absolutely. That is usually our biggest issue with clients, and especially small business owners. They're so busy running their business that doing the accounting and having the receipts and reconciling their bank accounts. I mean, most of us don't reconcile our home bank account, let alone 1 or 2 for our business. Without proper records, it's impossible to do a tax return, and it's also impossible to help you grow your business and save as much in taxes through planning and consulting.
Speaking about taxes, I have a friend of mine who has an internet-based businesses, and he's informed me now the government's trying to make a move to have a sales tax on everything that he sells, no matter where he delivers it. Do you have any familiarity with that subject?
I do. That has always been an issue. Obviously, the internet is becoming a huge opportunity, not only for businesses to transfer, software particularly, but if you're selling something over the internet, the rule used to be you paid sales tax on where your server was located. So business people are very smart. They set up servers in the Cayman Islands and different places.
Oh, really?
So that you didn't
The
have
internet
it here.
server?
Yes, the internet server.
That's
Yeah.
interesting. I thought it was
And the-
basically where you had if you had a retail store in a particular state.
If you had a retail store, where you ship your stuff, if you were to ship it, somebody purchased from you online, the retail store would pay sales tax to the state they shipped it to. So if they shipped it to Nevada, you'd pay sales tax in Nevada.
What an accounting nightmare this
Instead
is.
of, yes, and you also have to allocate your income. So if you sold $1 million worth of stuff in Nevada and $3 million in North Carolina, well, you got to file a tax return in Nevada to report that $1 million and a tax return here in North Carolina. And if you're a flow-through entity, an LLC, a partnership, or an S corporation, as an individual, you also have to file in all those states. So your tax return can get very big and very cumbersome quickly.
Wow, that's so internet-based businesses. We just had an internet-based business expert on last week, and he was describing how this is starting to get more complicated, and I could see how it's really getting more complicated. I know that they're really getting on with these taxes. As a matter of fact, my friend, I promised him I would ask this question. They are now collecting sales taxes on shipping charges?
Yes. The governments, both federal and state, are really hurting for money to help grow and to meet budget requirements. And they are coming aggressively, very aggressively, after small business owners and individuals to get those taxes.
Enough about taxes. Scott, let's talk about lawsuits. What about different types of lawsuits with different types of entities?
Well,
So if I have an entity and I'm a realtor and somebody wants to sue me for something, or I made a mistake in a contract or something, it's
well, it'd be a breach of contract action, and what they would do, or at least what they should do, is to name all necessary and proper parties. What that means, in layman terms, is they'll sue you because you were the player. They'll sue your company because you're operating within the scope of the company.
Right.
And they do that simply because when they initiate the lawsuit, they're not sure who exactly is at fault. They want the company for the deep pocket purposes. The company is on the contract. You're on the contract as the player, even though at the end of the day there's limited liability. The fact is they could very well name you individually. So that would be a very likely scenario.
so in a corporation, really, it kind of really doesn't protect you too much if there's negligence involved as far as the individual goes.
Well, that's generally true. If you get sued as an individual and, again, if you're acting completely within the scope of the corporate entity and you've not done anything off color or awry and you haven't acted with negligence or you haven't committed any fraud, then the company should defend you, pay to defend you, i.e. they'll hire an attorney to defend you in the lawsuit, and they should indemnify you, meaning that if there is a judgment or settlement, the company will foot the bill, in effect. And those kind of provisions are parked in an operating agreement for a limited liability company or bylaws.
What about errors and omissions policies? I mean, are they worth it?
Absolutely. Depending on the business, I highly recommend that that gets put in place, as well as a plethora of other coverage that's available to a small business owner, i.e. workers' compensation and whatnot. And in an E&O policy, and I'll speak in very general terms, if, for instance, you do something, again, within the corporate structure and within your particular line of business, what you would do would be simply make a claim. The carrier will decide whether to, and again, I'm speaking in very general terms,
Sure.
will decide whether
Well,
to
you're
pay
an
the
attorney, so of course you have to speak.
correct. Well, there might be a divergence of opinion on how the process works, but for the most part, the carrier will hire an attorney to defend you. And insurance companies always say the duty to defend is clearer than the duty to indemnify. And what that means is they'll pay attorney's fees ad nauseum, millions and millions of dollars, as opposed to actually settling the case. And again, that's just my personal experience with the equation, but it's still worth having in place, absolutely. And again, if you're a small business owner, a retail shop, for instance, you have folks coming in and out, you can have a slip and fall. That's perfect for the type of coverage that an E&O or premises liability would cover.
Yeah, I would say that pretty much would come under the area of premises liability.
Correct.
E&O would come under a service type business,
Yep, that's
something
correct.
like that. And but no, you're right. I mean, the attorneys, they do their thing, and I guess, but it's at least the E&O policy. I think the benefit would be to have someone to speak to because you're going to have a consultation with the E&O policy's attorney, I guess.
Right, the claim adjuster, whoever isn't taking the claim,
Right.
they'll assign it to counsel. They typically have a short list of firms that they've worked with in defense counsel capacity, firms they trust. 90% of them, 90+% of them are excellent law firms and attorneys. and those are the folks that usually get the call to defend that type of situation.